If you're worried about paying tax on the cash that you pull out of your business, then this video is for you. Most people find their current accounts really confusing and often misleading because they don't have a fundamental understanding of what a current account is. Because of this, they don't take the cash that they've already paid tax on, so their finances at home suffer. My name's Hamish and I'm a director here at IIF Chartered Accountants. We're really focused on making accounting in plain English so that you can spend more time building your business rather than spending more time on accounting. Before we get into the tax that you pay in your drawings, I just want to touch briefly on where the cash in your business comes from and goes to. So from your bank account, cash comes and goes into it from your customers and your suppliers. You then spend some of that cash on finance, so the cash goes back and forth with your banks on loan agreements, with finance companies on vehicles, and then cash also goes back and forth with you personally, and that's what we want to talk about today. So the cash that goes back and forth with you personally is often the lump sums of cash that you draw out of your business over and above your salary. It's end of year adjustment that your accountants make around home office and motor vehicles, and it's other bits and pieces that you might draw out of the company, like an insurance policy if they're paying it on your behalf. So when we talk about your current account, we're talking about the loan or the cash going back and forth between you and your business. For most people, the profit in their business is what ultimately hits their bank account. That profit is what they pay tax on, so when they then draw the cash out of their business, they've already paid the tax when the cash hits the bank account or goes through the profit and loss report to be more technically correct, and then when they draw it out themselves, they don't pay tax at that point. So what this means is that if you've got some cash in your bank account, as long as you don't have an overdrawn current account, which is a whole separate topic, as long as you don't have that overdrawn current account, then you're entitled to draw the cash out without often paying any additional tax. The trap for many though is that the profit that their business earns isn't equal to what's sitting in their bank account. When we've got a mismatch between profit and cash, we often end up with cash flow problems, which are a different topic to solve around looking at your working capital and how quickly the cash is siphoning through your business. So if you get a chance, compare your drawings today to the profit that your business makes. If there's a large discrepancy, often that's an indication of a cash flow problem. If this is you, then maybe check out our cash flow ebook, which you can find a link to underneath this video, or get in touch with us for a working capital analysis. Thanks for watching.